you sense like whenever I go to Amman, for example, there's a lot of litter, right? And I think that's your individual sense of, I don't care about, I have no civic responsibility, somebody else's responsibility. And I think that's the measure. When people don't litter, it's not about being like worried about, keeping the street clean, or, it's more about having a sense of shared civic responsibility. And that reverberates through everything, that kind of mindset, including investing locally versus investing abroad, etc.
To start with, so I've been a financial advisor in multiple ways throughout my career, and there's one consistent thing that I've always realized, and it's the best path to create wealth has been through building a stellar career. And the second thing that's consistent as well is the best way to preserve wealth and reach objectives is through proper planning. And that's what this whole podcast is supposed to be about. It's about meeting people who have built an amazing career and seeing what are their objectives and getting a bit personal with them in regards to the same. So I'm very lucky to have Khaled Talhouni with us today. So thanks for coming on the show.
No, thanks for having me. This should be fun. So I'm really looking forward to it.
Yeah. So I started intentionally without an introduction to what you do, because I would want to see, the world of venture capital, or what you do in your own words. So tell me, what is it that you do?
So in its simplest form, what I do is raise money from family offices and institutional capital to deploy that capital and invest in early stage founders and entrepreneurs. I think what we're focused on doing is really help back and build great companies in the tech space, kind of writ large, so very broad definition of tech, and really figure out how do we kind of propel these companies forward, grow these companies. And then we help kind of support these companies different ways, through kind of strategic support or through helping the founders through their kind of different trials. As we all know, it's quite hard building businesses from the ground up. And the ultimate aim is to, having invested in equity, to eventually sell our stake or sell the company as a whole, or list the company in an IPO and make our return. It is called venture capital because it is a highly risk correlated kind of asset. It's very, very risky. Most of the companies we invest in fail, and that's just part of the game. So it's a little bit like playing roulette, a little bit like educated guessing, educated gambling, but it is really, you're looking for fringe or tail outcomes.
Okay. And you're the managing partner for Nuwa Capital. So how big is your team?
So we're about 10 people. We manage a $100 million fund today. We also have some SPVs where we manage some additional capital. Then we have another pool of capital where we are for later stage investments that we're just kind of putting together. And we also have a joint venture with another asset manager where we advise on debt, on venture debt. We don't manage it, but we advise on it. So we're trying to create this kind of full service firm where we have solutions for the capital requirements and to some degree the operational requirements of startups and founders in the region. And we focus on investing in the Middle East, specifically GCC, Egypt, Turkey. That's our kind of primary focus. We can do a bit of Pakistan, Jordan, etc. if we find something we like.
Very nice, very cool. So it's primarily MENA focused.
Yeah, MENA and Turkey.
MENA and Turkey focused. So you would have a lot of insights into the region. But before we go into that, what I would like to know is what do you do as a managing partner? What's your role within Nuwa Capital in terms of your day to day?
Yeah, it's just sometimes it's like I feel like the chief warden at the asylum, but it's like, because it attracts this industry, whether on the founder side or on the investor side, on the VC side, attracts, I think, let me say, eclectic personalities, to put mildly. So I think my job, which is one of the fun things about my job, is because these tend to be small teams inside the VC firm. My role is to kind of help just direct the flow of priorities. So, we want to focus on sourcing. How do we source better? How do we invest better? How do we come up with a thesis or evolve our thesis? So that's kind of on the internal side. On the external side, I look after a lot of the fundraising or the LP management. So I'm kind of like the chief sales guy in a way. We do have Stephanie on the team who does the fundraising, like day to day, but like I do a lot of that as well and managing the LPs. I am sadly I do less of like the day-to-day investing, but I do invest. But less than, it's not like the majority of my time of like finding a company and then, working through the due diligence and presenting the case to our investment committee, etc. That's less of what I do. It's probably a third. That's probably a third of my time. It's more about how do you kind of get everyone to push in that direction in a way that works.
Yeah. I think it's so important to have, because I understand venture capital very well, and it's so important to have an ecosystem of venture capital in the region. And it's so nice to see that in the Middle East now that we have this developed ecosystem where we can create companies, and these companies that are created can seek funding to expand and to become solid companies. And it's amazing to see, one of the few people who manages a large VC. So wanted to first go, how did you get there? Like, what was your journey in getting to where you are today?
Yeah, I mean, it's a great question. I mean, the honest answer is like totally by mistake, Yani. So you started by saying like, think about like careers and how careers develop and evolve. Mine was like totally, just to kind of think through my journey and then how I got to here basically is I came out of college. I went to university in the US and I wasn't really sure what I wanted to do with my life. I think the default plan was to go to law school. And I had not really kind of prepared much in my senior year, so I didn't do the LSATs. And
where was this?
Duke University in North Carolina.
Okay.
And I was like, what do? I need to sit for the LSATs. I sat for them very late, too late to kind of get in my application. I was a bit all over the place while I was in university, so I wasn't really kind of career-minded. I think the traditional career path at that time, this is pre-GFC, pre-financial crisis, 2006, 2007. The traditional career path was from that type of university, and the type of degree I had, which was economics, was to go into investment banking because it was highly lucrative. Yeah. Straight out of college, you get big bonus. Everyone wanted to be an iBanker. Yeah, it was the big thing. Yeah. It just did not appeal to me.
Why not?
I interned somewhere, and I felt now in hindsight, it's like there's a lot of I can intellectualize it by saying it's like you're living in a financialization of the economy. You're in that sector where everything's abstract. You're not actually touching what you're kind of advising on. It's so I think also personality is involved. I think it kind of attracts a particular type of neuroses, and which I didn't find particularly appealing.
It's definitely tough.
Yeah, anyway, for a variety of reasons, it was just not my thing. So I had an uncle here in Dubai, and he said, "Well, why don't you come here and like find something for a year while you apply for law school? You can crash on the couch." So I came, and I thought when I first arrived, I thought like, my shiny elite US degree is gonna like open up the world to me, and like everything's gonna be paved with gold, every road. And it turned out to be actually quite tough, like to get a job. So, but when I landed, I spent a few months like trying to figure out what to do. I couldn't really find an in. And then I met Walid Hanna, who's now the founder of MEVP, Middle East Venture Partners. At the time, he was at a private equity group that doesn't exist anymore called Dubai International Capital. And they were launching a seed fund as almost like a CSR project, actually, and an angel network to co-invest with it, to get high net worths to invest in startups, alongside the fund that would co-invest together to give sorts of validation to the investments and to create incentive for the angels to invest in these companies. At the time, there was absolutely nothing out here. There was nothing. And I had no idea what any of this meant, frankly. And I said, "Well, it's offering me a job. I'll take it." Exactly. So I met him through I'm trying to remember how I met Walid. I think it was through somebody else I went to interview at, and he said, "Well, I don't have anything for you, but check Walid, he maybe." So, and at the time there was nobody in this organization, just him. And he said, "Well, I could use some help, and you seem very cheap, So like, so he offered me a job, which I'm always extremely grateful for. And I've been in early stage investing and a bit of private equity ever since, like for the past like 17 years. I've never left it. So I got into it having absolutely no idea what it is. In a time when the industry was totally not viable, there was nothing much to invest in. And that's how, and the rest is history, as they say.
Was there a specific time where early stage investing was born in the Middle East, or like where there was an inflection point of, oh, now this exists and there's that opportunity set, or has it always been there?
That's a great question. I think you've always had a culture of, you don't call it like angel investing, etc., but you've always had this idea of high net worth backing projects. I think this has been kind of, since time immemorial. We've had this in our culture. It doesn't have to be tech or classically like a startup funding, but this idea of backing a venture is kind of deeply rooted in our culture. If you look at like Islamic finance structures, also the idea of murabaha is really built around kind of this idea. Is like you come together around a specific cause and you. So this type of thinking was always been there. In the more classical sense, in the more traditional sense of what we understand as VC, angel investing, kind of tech investing, I think 2007 there was not much of anything. So you look at the largest companies at the time, there probably would be. There was a company called Arabia Online a few years back, which was supposed to be a large content portal. It didn't pan out. It was way ahead of its time. And the other large business was Maktoob.com, which was also a platform. Its biggest business was the email, similar to kind of like Arabic email hosted online. And it had a lot of other assets.
They got bought out by Yahoo?
Yeah. But there was a holding company. The founders, Samih Tukhan Hussam Khouri, way ahead of their time, started it in the early 2000s. And then the main business was that at the time, which was the Gmail and the content, the hosted email and content. But they also incubated within it many other assets. They had a gaming business called Tahaddi. They had a Souq.com, which ended up being much larger than Maktoob. But that was probably the largest tech business at that time. And the main kind of limitation factor was high-speed internet penetration. So, mid 2000s, most internet penetration was quite low in the Arab world, and most of it was dial-up still. And if it was high speed, it was through DSL, so it was a line. You had to have like a physical line connected to your home. So that limited in a huge way, I think, the numbers of people who had high speed, and it was sub 20 million, 15 million in the entire region. So that limited the viability of like tech-based businesses generally. And I remember thinking, when I had this job and trying to kind of evangelize for, let's get, supporting founders building in the tech industry. People would laugh at us basically and say like, nobody's online. It's going to take like, I don't know, hundreds of billions of dollars to connect fiber to the home in the next 20 years. We're not going to have like a tech industry, internet-based industry till like 2040 or something.
Wow.
Like that was and you talk to the telcos, you talk to like the traditional kind of PE guys, and they'd all kind of just find it like, slightly amusing, like what we're doing, and just think we're just ridiculous. What changed, to your question rather, of the inflection point and what happened was really the launch of high-speed mobile internet, which the cost of which and the rollout of which really took off around 2012, 2013. That's the inflection point. Once you started having hundreds of millions of users, all with high-speed internet, they demanded eventually services and content that are digitally native or internet-based. And you see within that cohort, you say 2012 to 2015, this kind of cohort of companies that emerged during that time. That's kind of the first wave. So Souq was quite small under the Maktoob umbrella, but then exploded in that time period. That's when they had kind of exponential growth. You had other companies being formed that we recognize today as the large kind of businesses from that era, like your Kareem, tail end of that created around 2015. You have the other kind of early players in the space, like the likes of like Mum's World, etc., Property Finder. These are all kind of from that early period. So that's kind of the cohort. The next cohort is really became a function, which is the 20, I like to call it like the 2018 to 2022 cohort. And those are the companies that emerged post Kareem exit. Because what happened is you had a different, like Cambrian explosion of activity. Like all this activity came out of the Kareem exit, not directly, but really because so many talented people in the regional ecosystem looked at this and said, oh, you can build a large business and it can be rewarded and you can make a lot of money doing it. And also validated people working for tech companies like this. So if you're a mid-level in your career at McKinsey, you saw all your kind of ex-McKinsey colleagues with ESOP at somewhere like Kareem, make a few million dirhams on ESOP. And you go, oh, this is real. Like this can happen. So suddenly, both at the founder level, you had so many people kind of starting businesses. And then also these kind of early stage tech companies were able to attract talent with the promise of making a decent return and building some wealth. So I think that's kind of like the evolution of the ecosystem as a whole to where we are today. It's still quite early, I think. It's still well behind a lot of other places in the world, even developing markets like Southeast Asia or LATAM. But it's moving very quickly in the right direction.
Okay. So I'm just trying to organize my thoughts then. So what we're saying is there was a traditional world, and then there was a monumental shift with technology that has now been able, or at that time was able to create companies that could solve problems that weren't solvable. And that's what created that industry.
Yeah, I think internet penetration, simply, it was like mobile internet came about so quickly, suddenly, everyone became connected through their phones and wanted to interact online, wanted like to shop online, read content online, play games, whatever it is. And that happened very quickly in a very short period of time in the early 2010s. And that built the industry basically very quickly. Whereas people thought it was going to take decades because you still need to lay so much infrastructure in the form of fiber to the home. So you'd have to kind of spend like billions in building all this kind of fixed infrastructure. The mobile just leapfrogged that. And that's what suddenly emerging market based, and this was not just a MENA thing, this is also like a wider emerging market issue. Suddenly, everyone's connected and it becomes a viable market for internet based businesses.
With that monumental shift, so I'm a techno optimist myself. Like I love the whole idea of how technology is changing our world, especially these days. And I think artificial intelligence is very monumental. So do you think the impact of artificial intelligence now adapting to that world where we're seeing more and more of it will be as monumental as getting that infrastructure for communication where we're all speaking to? Or do you think, no, it's not as monumental as the internet and that?
I think it's much more impactful. And this is, I think the advent of AI in its current form, as we understand it today, and where its trajectory and where it's going, I think suggests that this looks more like the creation of the printing press or the steam powered engine and the industrialization. So it's that size of a shift.
Can you give some, because I love that example, but can you give an example of because I agree the printing press was huge, right? But can you just elaborate on that point a bit more?
I think the impact of the printing press is social, political, and economic. Arguably, why the printing press was so important and impactful from a historical perspective is before that, knowledge had to be transcribed. So books were written by hand. And so dissemination of knowledge was super slow, right? You need to have, actually, it was monks in medieval Europe who would just writing by hand. And it was just for the elite. So knowledge was just for it was very expensive to produce a book. And it was just a very small number of people who could read it, etc. And then on a social level and political level, it also monopolized the idea of religion because it was only the clergy and the priesthood who and the church who connected you with faith because they had the scripture. No, the lay people, the non the non-clergy had no way of reading the Bible or whatever. So why that's important? I mean, not to go into the weeds in history, but like the printing press allowed the creation of the Reformation, the Protestant Reformation, which totally like changed the face of it. It's till today, the 30 Years' War, which is the 30 Years' War, which is the kind of Reformation wars between kind of those who are Protestant and the Catholics, is Europe's bloodiest war, including the First World War, Second World War. And what that led to eventually is this kind of idea of liberalism, and eventually led to kind of like the Industrial Revolution, because it empowered the individual with their own knowledge to seek their own knowledge, and to kind of usher in these ideas around around you don't need somebody else to tell you what to think or what to do. You can find that for yourself. So that's why like the printing press was such a huge, you can draw so many paths in history from that one moment. Back to AI, why AI is like that? Because if you think about it, the Industrial Revolution was very deflationary for capex, meaning with capital you could create so much now because you had industrial machinery. So if you had the capital, you could do so much with it.
Sure.
Whereas before, even if you had capital, you're still reliant just on labor. So it was linear. The Industrial Revolution, the steam engine, the loom, all of that stuff, that allowed you to transform capital to be much more productive. What's really interesting about AI is that it takes that same, kind of in my view, same dynamic to OPEX, to labor, meaning the productivity of a worker, especially in the knowledge economy, which historically had been kind of capped in its productivity in the past like 30, 40 years, lead to kind of a huge step change. So there's two ways to think about this. One is, people become redundant because you don't need as many people, etc. If AI can do like 90% of the work, or you look at the other way around, where actually the one resource, the one person, can do so much more now.
Yeah.
So that creates like a productivity explosion.
Sure.
In the interim, I suspect there's a lot of dislocation that's going to happen. And what's slightly frightening about this is the speed at which the change will happen, which will cause dislocation. In the same way, the printing press led to, on the negative side, the 30 Years' War, but ultimately led to like the explosion of knowledge across Europe and the world.
Led to affluence.
And affluence, etc., and led to liberalism. Yeah. When I say liberalism, I mean like classical liberalism, like freedom of thought, freedom of expression, etc. Sure. I think the AI revolution will have major dislocations. We just don't know what they are yet, but it's coming somehow on the negative side. But on the positive side, it means you should be able to get productivity gains that are exponential. Like suddenly, your accountant can do like 10 times as much, 20 times as much. So that's and the rate at which AI is developing is exponential itself. So it's getting better and better at an exponential rate.
Yeah.
So there is a very positive trajectory, but which is good for all of us. But we should also be aware that in that journey, I think it will cause unforeseen social, political, economic issues that we just don't. It's hard to kind of project easily.
Yeah, I think I go back to two things that I remember Sam Altman, the CEO of OpenAI, saying. He was saying the cost of intelligence is going to zero. Essentially, the cost of intelligence as a company or as anything is going down to zero. And the second thing is we're getting to a world where you're going to have a one-person, $1 billion company.
Exactly.
Because you no longer need as much. So definitely.
And the cost of launching a business will go to zero.
Yeah.
Like it used to be in the 90s when you had if you want to start a business, I think we estimate that just to get started, you'd need $5 million worth of capital because you need to buy the servers, you need to buy the computing power on premise, right?
Yeah.
You need to do all of that. And the cost of launching like an internet business in 1999 or 2000 was like $5 million. Today with like cloud, fast forward like 10, 15 years, With cloud-based services, suddenly your capex went down significantly. You don't need to buy all this equipment and put it in your office anymore. You can just subscribe. It's much more efficient. So the cost of launching a business becomes like closer to like 500K roughly, depending on the business, but that's it. The next step is with AI, to your point, is like that goes down even further. It could be just $1, right? Because you don't even need as many people. You can do so much more with just yourself to launch the business.
Yeah.
The key is that you can either look at it negatively, meaning, people are redundant, or you've created so many more businesses that in turn create so much more economic activity that creates more work for everyone. So there's kind of two ways to look at it. And undoubtedly, there's a journey through that. So at some point, you'll feel it more on one side of that equation, and then eventually you'll feel it more on the positive side.
So I think my mind always goes back towards like investing in the way I think about it. The way I always looked at what we're talking about when it comes to clouds and servers, etc. An example I like using is with Meta is a very good one, or Google, but Meta especially. The way I've always seen it is Meta's rise is based on the fact that advertising went there. So you had your traditional newspaper, you had your billboards, like a lot of that value that was created by these companies was extracted and given to this very large company, which is Meta. And what worries me about AI, or what I always would love to think about is AI taking us to a world where all of that value extraction is taken by, because America's leading at this point in this race, at least from the software perspective, is all of that value getting extracted to a few companies that are going to be these mega companies? Or is it going to be something where there is a democratization of value within the industry?
Yeah, I think to that kind of Sam Altman quote, that intelligence is going to zero, the cost of intelligence is going to zero. I think the key point there is that it's more about the application of the compute power. So yes, America is leading the world, or whoever is leading the world in kind of building these kind of infrastructure layer, and there's value to be extracted at that part of the value chain, which will disproportionately be there for sure. The next layer is on the application layers. That's open to everyone, right? Anyone can build a business using these tools and these technologies. So I think on the infrastructure level, it will end up being controlled by some companies or by open source, because open source is actually quite close to OpenAI. If you look at like the different open source models, they're not far off, right?
Yeah.
So, I mean, that's one question. I mean, that's one thing to think about. But I think the much bigger impact is how the value is going to be extracted from elsewhere, to use your kind of analogy, on the application basis. So how is it going to disrupt existing industries, and in what way?
Yeah.
Which we don't know. I mean, we can project and pontificate and theorize, but it's hard to really tell.
Yeah, I would love a world where every company has a niche where they use these applications to solve their own problems, instead of this one large company that's able to solve all the problems.
Yeah, I think it's more like ChatGPT, for example, is the infrastructure. It's the tool. It's email.
Yeah.
Rather than, do you see what I mean? It's like the email. It's not the. It's the TCP IP kind of thing, the technology, really, but it's monetizable. Yeah. I think that's what it looks like, and then how you use that it's just a tool.
Yeah. So through your career, what you see a lot of companies being started and making use of new technologies to disrupt industries or solve problems that weren't solvable. So what nice examples do you have of using AI to disrupt, or is it too early now to start seeing that?
I think it's like we don't see that's not true, actually. We do see some like native AI infrastructure businesses, like Arabic-based large language LLMs.
Oh, do we? Do we have things coming up?
Yeah, and also the government, like both the UAE government and the government Saudi, spending a lot of money on insourcing and onshoring, like the compute power and the infrastructure.
Yeah, makes sense.
I think what's more interesting is looking at how companies are using AI early signs of how companies are using AI tools to kind of really boost productivity. And that's already there. So if it's as simple as, building your website, you're using, instead of a copy editor, you're using ChatGPT just to kind of, fill out, like, build me a website, blah, blah, blah. So just stuff like that. That optimizes both speed and cost.
Yeah.
So the kind of go-to-market's going faster. And coding, you're already seeing like the use of like, you see it across companies in the region, like where dev teams are using Copilot type of AI solutions to kind of optimize how they're kind of writing code and how they're debugging code. And it's already happening. It's already here, right? Making everyone faster and more efficient. Yeah. Next wave, probably on sales. I think on outbound sales, anything that has outbound sales, I think you'll start to see that client interactions will start becoming much more automated.
And more personal.
Like that whole thing is
it's not
coming.
Press 1 for this, press 2 for this.
Yeah.
It's just natural language.
And just like if you're a B2B or even B2C sales, I think a lot of it's going to start becoming like AI driven. So you send out 10,000 emails on spot to potential clients as leads, cold outbound, and then the AI itself will filter what comes back. Maybe even the first filter, the second filter, the third filter, even till you get to a human being. Yeah. So I think that's starting to already happen a little bit.
Yeah. Just to change topic a bit, what I've seen a lot in Middle East as well is you see a lot of the companies that do very well are companies that take American models or European models, things that have succeeded, and they replicate it here. I'm trying to think when it comes to like proper deep tech or proper innovation, do we have examples in the region of companies who have truly innovated instead of just copying a model that worked elsewhere?
Yeah, I think like so 2 points on this. I take issue a little bit with the idea that adapting a global model to local requirements is not a form of innovation, because it's not just taking it off the shelf and doing it here. Yes, you are taking the business model, the approach, etc., but you still have to do a lot of like adaptation here.
Which you have to localize.
You have to localize. Like, so a great example is, whether it's Souq or Kareem or Jahiz, or the big innovation relative to like their US equivalent is most people here still pay with cash. So they have to build an entire infrastructure to be able to like do cash payments, which is complex and hard, So I think it's not as simple as just, copy the model. Yes, that shortens the path a bit, but there's a lot about like how to adapt for a local environment. For deep tech, I think our issue is not, we don't have as much here because very simply still a lot of what we define as deep tech comes out of research-based universities that we just don't have, or we don't have the quality of the institutions to produce world-leading research in engineering, tech, etc. And we don't have the funding structures for that, which is grant-based funding usually. So we don't have, like, it's very hard. We don't have world-leading universities, very few really world-leading universities where you get the best faculty, the best kind of infrastructure, the best labs, whatever, to kind of conduct world-leading research into quantum computing, for example. And you don't have the funding for it. You can't, if you're doing research in the space outside of KAUST, you can't, there's no money for it. It just doesn't exist. It's a long story why we don't have it, but I mean, that's a separate kind of topic. Yeah. So absent that, that's the first step in the chain for deep tech. You're not going to easily get like the commercialization layer, which is the next step after the research.
Yeah.
So we still need that. And we need the nodes where there's the confluence of the researchers, the capital, the commercial elements, like you do in the Bay Area to create like world-leading universities married to venture capitalists, married to kind of like talent, all coming together to kind of spawn this type of deep tech. I think we're far from that.
Yeah.
And that starts the beginning of the chain, which is we need like huge amounts of grant-based, non-commercial funding for research-based kind of projects.
We need to stop the brain drain, right?
It's hard to break it.
Goes and studies elsewhere, then as well. That's probably you need the world-class institutions to keep the people that then develop.
Yeah, you need to build the entire ecosystem for that, which is a totally different ecosystem. Yeah, it's like very different to what we have or we do here today.
And there is focus on that at the moment.
There is. I think there's more and more interest, but this is generational. Like this doesn't happen easily. I would like to see more and more world-class research universities, well-endowed research universities being set up in the region. I think you don't have a lot of that yet. Some of it has to come from government, but a lot. If you look at like the top U.S. universities, the endowments are private. Like it's people, donating, right? Like it's alums who donate. We don't have that for universities here because also there's no tax incentive. So, I mean, there are a few reasons for it, and not to get too into the weeds on this particular thing, but that you want real deep tech, whether that could be in pharma, could be in biomedical equipment, could be across. It's not just like, computing. You need like a ton of money focused on grant-based financing and research, and the institutions that are able to kind of absorb it.
Yeah, I think from my experience as well, what I've seen, I think in the US, people who amass a very large amounts of wealth, there's an education of wealth that happens at a very early age, that they understand it very well in terms of how they can make use of it in the future. An easy example would be Bill and Melinda Gates Foundation.
Yeah.
So essentially, you get a lot of wealth. You know that this wealth eventually is more than your kids could ever spend. So you create a foundation or you give to an endowment fund. And this endowment fund is an ongoing concern that will always exist. It's well capitalized and it generates an income to support specific things. I think we have a few instances of this in the region, but not a lot.
So what we have here, I think particularly Saudi, interestingly, is one of the, I need to like refresh on the number, but it is one of the highest proportions of percentage of charitable giving per capita in the world.
Oh, right? Really?
In the Gulf and in Saudi. So we are giving people in the region, but it is very focused on poverty alleviation, and that's where our money goes.
Is it through foundations and endowments, or is it direct? So is it, direct grants to people, or is it going towards a foundation that's investing it, that then has a budget to support people out of it?
Both, but very focused on this idea of poverty alleviation. So either direct, like zakah, right, or through religious institutions, or through awqaf trusts who do that, or through charities and foundations. We give a lot, actually, as a percentage of our income. We are giving people. You can look it up where we fall across particularly the GCC, but the Arab world in general. I think where it's different is we don't have this kind of idea of civic engagement around giving. So you're not giving just for poverty alleviation, you're giving to, build public parks or to build great universities. You look at like all the major Ivy Leagues in the US, they're all, disproportionately 19th century, like what they call the robber barons, basically endowed all of them. Yeah. Right? Like at the university, I went to Duke University, like totally endowed by like one family, like in the originally late 19th century, in the 20th century, who had a tobacco monopoly. Yeah. And they gave the equivalent of $2 billion on today's money, set up a university because they believed in the role of a university and its importance to a vibrant society, etc. And continues to this day. And today it's more tax driven as well, but also people want to give to specific causes that's not just poverty driven in places like the US. We don't really have that conception, right, in this part of the world as much. Again, not to go into the weeds on why, but it's just there's no this idea I'm going to, build a public park. It's not, it's not a thing, yani. Like I can't think of a place for it because we expect the state to do it. Yeah. Because that's the nature of the social contract. Yeah. The nature of the social contract is the state should do stuff like that. So anyway, long story short, that's one of the reasons why we don't have that as much.
Yeah. So I think in regards to that, so I've been doing a lot of, I've always been, but now I've been going back into doing research about how endowment funds, like university endowment funds, and how they invest. And usually they'd have two elements. They'd have the charitable giving element. So you have the element where they have a budget of, let's say, 5% of their asset base every year supporting a specific cause or causes. And then that 5% is coming from a pool of assets that's been invested to generate. And usually they would be one of the biggest investors in venture capital, right?
Yeah.
Through
Historically,
funds.
Actually, the endowments, university endowments, are one of the largest allocators to the venture capital asset class.
Yale is renowned for
Yeah.
that, right? I forgot his name, David something, but
He created it. It's called the Yale model, actually, of how to.
Yeah. So how much and does that follow through in the region where do we have endowment funds yet, and are they your investors from a who funds what you do?
Locally, no. So it's a big missing part of the allocator mix. So we have sovereigns. There are some trusts that are
And
investors.
these are family trusts we're talking
Family
about?
or
Just
charitable
family.
trusts.
Okay,
Yeah,
charitable
but they are
trusts, yeah.
family. A lot of the times they're kind of like family driven.
So objectives is to maintain the wealth for the family amongst various generations.
There's this type, and then there is the charitable type. There's both. So there's like, we have a family trust because we want to maintain the wealth for multiple generations, and they're investors. Then you have like family offices, but we don't have as many or nearly as much of the totally independent, private, non-government led, non-profit trusts and endowments that are sizable and willing to deploy in this type of asset class. We don't, and there's no Harvard endowment here. There's nothing equivalent to that.
Yeah, I always thought, like, isn't that the whole concept of a waqf? Right?
A trust. That's a trust.
Yeah, okay,
that's
it's a trust. Yeah, I always seen it as an endowment.
Yeah,
but
it's the same, same idea. But
like it's an orphaned entity. It doesn't have owners. It's built for a specific.
What's interesting now, particularly in Saudi, you have this kind of intergenerational wealth transfer. That's when it's used to have like a patriarch. He controls the wealth, and he has kids, and then they have kids. Like now they have grandchildren. So it's spread amongst like a much larger group. And one way they're doing it is through these kind of endowments and these trusts, where they're kind of concentrating capital through third-party managed trusts. They tend to be extremely conservative, though. This also movement explains, I think, a lot why there's so many more IPOs now. There's also the regulatory side, but also this intergenerational wealth transfer means that you used to have, the owner, one person who's the chief executive, who's, the chairman, he's the guy, right? Now it's like, that person might have passed away or too old, and then they have kids and their kids have kids. So how do you manage the whole thing? One way is to say, we're going to crystallize the liquidity. We're going to take some money off the table, and then we list and bring in professional third-party management. And the listing creates discipline around running it less like a family business, even if it's just listed 20% of the shares, but it creates a discipline around professionalizing the management and making it, and creating a way for the wealth to be extracted from the company for multiple shareholders.
Yeah.
So that's the big kind of thing I think going on right now.
So to summarize that, my understanding of that in my own world as well. So you have that one person who has a lot of assets, but the primary asset is a trophy asset, which is a big business.
Yeah, and his name's on the door, right?
Yeah, exactly.
Usually, yeah. Like his name's on the door.
Yeah. It's his.
Yeah.
And then he has a second generation, but he's getting old and he knows that, okay, I'm going to have to do something. And now it hits, okay, well, I have to start taking out from here and start diversifying for different causes, whether it's charitable or whether it's for ongoing the family generation over generation well-being. Yeah. So it's the only way to sell such a large business or to take some money out is to go public. Yeah. So they go public and then they say, okay, what are our objectives? And that objective could be charitable, or it could be ongoing success of that family heritage.
Preservation of wealth. So the business is basically taking profits out, putting it into a trust or an endowment of some description for the rest of the family. And then you have different types of structures, but this is one. And then the business is taken public to give the initial endowment or to distribute wealth to the family members. And they keep some of the shares in a publicly traded business so they can come in and out as an easier way. Yeah. So there's kind of two layers to that.
And part of that, part of what the family is also doing is what they're looking to do is now that they've had this, they want to diversify out of it. So as you have this, okay, how can I get geographical diversification? So how do I invest globally but still support locally? How do I diversify my sectors? How do I diversify the way I invest? It's not just venture capital, it's private equity, like larger businesses, but it's also public companies, etc. So it's about diversifying that. And usually that's, and the reason I do a lot of that research is because you see with family offices, they get so organized because they have such a large need to get organized in terms of how to diversify the wealth, and they can afford it.
Yeah.
So if you have $100 million, you can afford getting an internal team to give you that thought process. And usually that allocation towards venture capital would be X percentage.
Quite small, yeah.
Yeah, it's 10, 20%. Like the endowment model would be the Yale one, you're talking about 20, 30%.
Yeah, and that's high, actually.
That's high, and usually it's lesser.
It's a subset of a subset. So you have like liquids, alternatives, and then within alternatives, like real estate, private equity, and then subset of private equity is venture capital. So it like goes down, 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 down like that. Yeah.
And what I wanted to know is from you on a personal level, because you're so specialized in venture capital, it seems like you've been doing that your whole career. When it comes to the way you manage your own wealth, do you wear the lens of, okay, this is my specialty and this is all I do? Or do you look at a more structured, diversified approach?
I do everything wrong.
Okay.
Like, so
Great person to have on.
all my money, everything I have is like locked in to what I do.
Okay.
As in like the carried interest I've accrued. That's still
can you explain what carried interest is?
So carried interest is like how like GPs and funds get paid. So we, the way the waterfall works is, let's say we have $100 million fund. If we triple that, $300 million, we keep 20% of the profits, meaning $200 million.
So it's to incentivize you in line
to perform.
with
Yeah. So, we keep in that equation, we keep $40 million that's spread amongst the team. Till you distribute, which is a very long cycle, like a 10-year cycle, you're accruing that carry because, let's say on paper, the fund is worth X.
It's a receivable.
Yeah, but it's a receivable, but not crystallized.
Yeah, of course, unrealized.
Unrealized. Till you sell all the assets, you don't make the money back. So that's a big chunk of everything I own. Yeah. The house I live in, or portion of the mortgage I've paid. Yeah. And then the rest is invested in the funds that I have. So like my entire kind of 70% of what I have, 80% of what I have is really in what I do.
Okay. The fact that you know the number means that you've done the
I think about
you've done the number
I think about it. Yeah, I think about it because it is going all in. Yeah. And I think for our industry, it's important to go all in. I think till you create that flywheel of wealth and success, I think I'm at the point where it really matters to be 100% aligned with my investors and with my founders. Yeah.
I think this is almost like a requirement, right? It's a requirement for, if I'm going to trust you with my money, I want to make sure that you have skin in the game, and you have to embody that in every way and form, and that's what makes you so good at it at the end of the day.
And the other is like opportunity cost. Like, I could, in theory, get a much better paying job, right? Because this is not a high wage job, salary job.
Don't make me feel sad for you.
Yeah. So we're having this conversation in the office. We have somebody in the office who keeps complaining about like, salaries are not super high. And I'm like, this is the nature of it. Like your opportunity cost is elsewhere, right? Like it's, and that's just it. So, you say, I am really deferring my upside for a much later date to do something that you enjoy with a lot of risk, right? Because this is risky stuff. This stuff may not pan out at all. But I think the not smart thing on the surface is the way I do it, which is all in. But I think it is the rewarding way personally, because like, it's all in on this thing.
Has that always been your objective? To get to that where you're all in on this, or has that just been natural, similar to how you came into it?
It's just the way I think. I think like this, and I'm wired like other people are not wired like this, right? And I think has meant that I've left a lot of money on the table throughout my career, but I'm comfortable with it because I feel a sense of purpose around the objective that I have, which is to kind of, invest in great companies, build the firm matters more than making some short-term money today.
So what does money mean to you?
Nothing really. Okay. It's just like I like living reasonably well, and obviously everybody likes it. And people lie about, a lot of people are not honest about whether they live well or not. But I like living reasonably well. But I think being wealthy absent purpose and sense of objective is a miserable life. And I know a lot of people like that. I know a ton of people like that. And I'm always kind of aware of it. And the purpose doesn't have to be like work related. Purpose can be anything, like, right? So money is a way to get there, right? Is to kind of help you achieve your purpose. It is not the purpose,
sure.
if that makes sense.
No, definitely.
I'm not
Makes
negating
sense.
how
It's just a
important
number,
it is.
right?
It's super important.
It's about what's the objective
Yeah.
that it allows you to get to. If your objective is to live a life where you are impassioned by helping building companies and building your own firm and building towards that thesis, well, you're already achieving it, and that's what money is supposed to be for.
Yeah.
But those objectives probably change over time.
Yeah.
So the question becomes, do you foresee your objectives changing as you get older?
No, I mean, I think ultimately it's doing something that gives you purpose and having enough money to support you in that, to live comfortably, the level of comfort you wish. Which I like. I live reasonably well, but like it's not. I'm not chasing lavishness. That's not my objective. It's having enough money to do what I want to do and to feel secure and without having to worry constantly about not having money. I think that's what my objective is in a way.
Do you feel like you'll still be like that in 10, 20 years?
Probably. I think maybe as you get older, you start worrying about, when you're no longer, economically productive. Yeah. Then you have to have enough to kind of keep that going. But I really believe that if you should pursue the stuff that you feel you're driving value to a wider ecosystem, society, whatever. And if it is truly valuable, you will be rewarded directly, indirectly. You will get rewarded monetarily, and it will happen.
Yeah. So if that's the case, I think it goes back to how I started, which is, and I really have this thesis, which is the best way to create wealth is to really to create success is to really go all in and to be very focused in what you do. And so tell me, is that what got you to where you are through those, you said 17 years? Would you attribute your success towards that all-in type of mentality? Or what would you attribute your success towards?
I don't think I'm that successful. I had this question. I had this like on another podcast once. I'm not there yet. I mean, the success is ultimately probably will be defined a few years from now. So I'm not there yet by my definition of what success is. So I don't think I'm there yet. I think to answer kind of the first part of the question. So I don't feel that successful yet. I think I still have, and I'm not saying this out of some false sense of humility. I just feel like, what have I done? Okay, invested in some cool companies in the past, helped some guys, set up this new firm. But still, I mean, the point is to have a huge impact on the course of the society you live in. And that's success. And for me, my chosen path is, I want to have 50 great companies or 100 companies that are amazing, that have changed the course of the way we do business in the region. Having been a small part of their journeys, I would consider that success, because that has reverberations that are much wider. Right? So
that's the goal.
That's the goal, right? Numerically, I say 50, 100, 200, but to have real impact on the shape in which our economic reality is created in the region. That's my goal. And I want to help founders create a vibrant entrepreneurial ecosystem and create big companies that employ a lot of people in driving value overall. That's kind of the objective.
So is that mostly, do you think, private sector led through founders and companies? Or do you think that's mostly government initiative and building the infrastructure and building all of that? I'm sure it's a combo of the two, but what do you think is more impactful?
Yeah, I think it is a combo. You need, government can be a major obstacle, but the driver is private money, ultimately. Ultimately, no matter how much government prods and pushes, and yes, they have a huge impact in policy, etc. Think of it like this: the brake is, the government. The accelerant is the entrepreneurial drive. You cannot create entrepreneurial dynamism within government. It's very hard. It's possible in some instances. You have some good examples. I mean, Dubai is a good one. What's happening in Saudi is a good example of that. But ultimately, the private sector, founders, entrepreneurs are the ultimate driver of prosperity in a way like governments can't. So that you need the government to kind of set up the right, like you said, infrastructure, et cetera. Because without that, and the right policies set up, regulatory setup, et cetera. Because without that, it just doesn't work. But the driver are the founders, the entrepreneurs, the builders. That's really what drives economic engines in the long run.
So 10 years have passed, and you've explained to us carry and the size of the fund. So it's a $100 million fund. Let's say the fund goes 4x, and the fund is now
That'd be
400
nice,
million.
yeah.
Yeah,
I invite you to
I'm
a
cheering
party
you guys
then,
on.
when I get that distribution.
I'll enjoy that party.
So ذكرني in 10 years time when we get to 4x.
Yeah, we'll be there. So you know the fund has made that much. The carry is huge. Now you have quite sizable, and you've seen that you've had some sort of success, and you might want to go success further. Would you take that whole thing and just go and build larger and larger funds?
So most likely what would happen is, I mean, in 10 years time, we would be on our third or fourth fund if we're successful. So
because they're not every 2 years.
Yeah, every 2-3 years? Every 4 years.
Okay.
So let's say 4 or 5 years, you start building the next one.
Yeah.
So by then we're probably on fund 3, fund 4, and a lot of the carry I would definitely be putting back into the funds. The next fund, the next fund, the next fund.
Compounding. So at what time do you call it quits or never?
And I don't think I'll ever call it quits on anything if I'm mentally and physically sound. There are other things I'd like to do in my life which I don't have time for. So I like writing a lot. I'd like to write more. I'd like to learn more. And I would just kind of change my mix of time spent more there. But call a quits fully on working, I cannot see it happening.
Yeah. What about, when it comes to, we talked about endowment funds and setting up those types of institutions that support the region, with Uber success, is that something you would consider, for example?
Yeah, I think what I've always, if I ever get to that level of wealth, I would love to kind of set up specific civic-minded endowments. So one thing I would definitely do is scholarships, because I went to university on a scholarship from the university, which is life-changing for me. I think I would love to do those types of things, but targeted like that type of kind of approach.
I'll ask one last question, which is, with doing the numbers at the moment, we see a lot of cash in the Middle East a lot of the wealth in the Middle East is currently cash. And I see that you're all in. And when I look at you're all in forming companies. So at least what's very important about what you do is your wealth is going towards value creation. And what you see a lot in the Middle East is there's a lot of cash on the sidelines. And how do you think we could make, as a region, how can we have a monumental impact to change that? Because there's a lot of cash on the sidelines that's not moving around the economy and creating companies, whether they're public companies or private companies or venture. At least, like you said, Buraba, the whole concept of thinking about money from an Islamic version was that money gets active. It gets activated. It creates value. But now we're seeing the complete opposite in the Middle East, where you have a large portion, the majority of the non-real estate is actually in cash.
Yeah, I think there's a general sense regionally with large family offices, even small family wealth, is, look, I live in the region, so I'm exposed to the region. Hence, I'm going to hedge my bets by putting the money in cash abroad, right? That's the mindset. And I think, no, actually, the better hedge for the region, this is a collective action point, right, is actually invest in the region to make it better. Hence, your risk of the region goes down. Do you see what I mean? Like that, but it is one of those, it works collectively, doesn't work individually. Yeah. So as an individual, you say, why do I need to do it? But if the collective does it, it works. And I think that's it's back to this kind of civic identification thing. I think this is the cultural mindset shift that I think the region needs. It's happening, though. I feel it happening. And just people a bit more interested in making their surroundings better. I'm from Jordan, for example. You sense whenever I go to Amman, for example, there's a lot of litter, right? And I think that's your individual sense of, I don't care about, I have no civic responsibility, somebody else's responsibility. And I think that's the measure. When people don't litter, it's not about being worried about, keeping the street clean, or, it's more about having a sense of shared civic responsibility. And that reverberates through everything, that kind of mindset, including investing locally versus investing abroad, etc.
Well, I would love for that future, but I think it's risky. Like I have kids, right? And when you have kids and you have circumstances and you have a lot of liabilities to your family, what you're also thinking about is there's things that are, as much as the people we have, as much as we align, there's some things that are risks outside your control, and you want to protect that by having two buckets. And the way I would look at that as well is I would look at Saudi PIF, right, the national pension fund essentially, and even with a large sovereign wealth fund, what you'd see is they're extremely focused on Saudi Vision 2030, and it's all about how do we support the economy, but you still have an international assets.
No,
and
I
it's
have
like
to,
how do you protect your people as a country, and as a family, how do you protect your family? But yeah, I agree to that. I think.
But the positive thing is PIF, I mean, the equivalent of PIF years ago would not invest locally. Very little, right? So that's changing. So in that sense, this is where government has a huge role to play, is like they're leading the way in investing locally, which is also driving a lot of private wealth to invest more locally. And you see it, I see it in my LP base. I see it in my, in how like these families are investing. They are more interested in building locally than they have probably since I've been like working, basically since I've been aware of like how things operate here.
I think that's a great way to end. I think it's a great time to be here, and I look forward so much to being here and seeing how that goes, and thank you for being a big part of that system, and thank you for being part of the show.
No, thank you for having me. This was fun.
It was great.
It was good.
And thank you for watching.